And I don't know how many times I take on a new investor and I look at their Form 8582 and I see these carryover losses. In fact, just recently, I had a client that was looking to do a 1031 exchange on one of their rental properties. However, after looking at his 8582, he had like over $100,000 in carryover losses from just this one property alone. Then we also looked at some of his capital losses and tax loss harvested the rest of his gain. Simply doing this saved him thousands of dollars in potential exchange fees should he have gone to a qualified intermediary and gone through with the 1031 exchange. Not to mention, he would have had the issue of the carryover basis, which in my opinion is arguably one of the biggest drawbacks to doing a 1031 exchange. And if you're a real estate investor, the higher your basis, the more depreciation you can get. In real estate, you calculate your depreciation on your rental properties based on the basis of your property. And this is just the depreciable basis, because your land will also have basis as well, and land is unfortunately not depreciable. So we look at the depreciable basis of your rental property. Whenever you claim depreciation on your rental, your depreciable basis decreases every single year. So let's just say, for example, you had a $300,000 depreciable basis on a rental property, and you took $200,000 of depreciation. Your depreciable basis is now $100,000. And if you do a 1031 exchange, that $100,000 depreciable basis follows you over into the next property. And this is one of the biggest benefits to those carryover losses. This allowed him to dispose of his property, offset all of his capital gains, use those proceeds to acquire a new property, and because he acquired a brand new property without a 1031 exchange, he now has a much higher depreciable basis that he can now repeat the process of doing a cost seg, or even just simply doing straight line method and getting that depreciation to offset his income. You want to look at those carryover losses, because if you're thinking about doing a 1031 exchange to avoid those capital gains, you may have carryover passive losses or even some tax loss harvesting that's carried over that you can use to offset that gain.